Joining us now is Saruhan Hatipoglu, CEO of Berry and CGTN's Global Economics Analyst. Thank you so much for joining us. Welcome.
Pleasure to be here, Francis.
China cutting import tariffs. Let's talk about that. How will consumers in China benefit from this move?
Well, that's a great move on their side because the tariffs, as we know, hurt consumers overall. And what we're seeing from the United States, Canada, EU, Mexico, and China side is that the consumers will be the clear losers. So it is a good move in terms of, especially for a country that is trying to shift from investment-based growth to consumption-based growth, they've made the right selection, the right move here.
And beyond China's borders, how could this move benefit the global economy, other countries beyond China?
Sure. There has been a lot of discussions behind closed doors and sometimes out in the public by China as well as other countries in terms of how to contain this escalation. Because not only is this war of words, if you will, with the U.S. now turning to action slowly, affecting consumers, we also need to talk about businesses, because businesses are trying to plan. And for them to plan, they need at least 6 to 8 months, for some longer than that, a strategy making. But if you don't know what your intermediate input goods are going to be subject to tariffs, then you stop investing or you delay it. And so it's very important that China and other countries are discussing this as to how to contain this. And this will probably result in more tariff reductions and more cooperation with China and other countries.
Let's talk about this trade conflict between the U.S. and China. We have a crucial deadline approaching, as you know, July 6th on Friday, when both countries are set to impose tariffs on billions of dollars of goods. Is there still time to avoid this? What do you expect? Are you expecting any sort of last-minute talks in the days ahead?
There's always hope because there are people in the White House that are advising the president not to do this. The issue that we have right now, and I'll come out and say it, people are saying we're at a trade war right now, we're in the middle of it. We're not. It is a probability now, it's not a possibility, so we've moved up to that level, but we're still talking about 50 billion worth of goods, 25%, which is about 12.5 billion. That's 0.1% tax hike in the United States. Now, if it stops there, because China reciprocated very quickly, that happens in politics. Sometimes we see that. However, the 200 billion words of tariff that's coming in is also manageable to a certain extent. But now we're hearing about auto tariffs. If that actually comes to fruition, the 25% automobile export and imports coming into the United States, then we are at a trade war. I can easily say that. But at this point, we're not.
You need to be careful about that.
Absolutely.
Yeah. Mm-hmm. And we've seen some major U.S. companies, Harley-Davidson, Polaris, this week, saying they will move or consider moving their production overseas. Do you think there'll be other U.S. companies that will follow suit?
Yes, because unfortunately what the companies need to do is they're thinking about three things. Okay, we have this tariff. What can we do? Can we pass the cost to consumers? Those who can will do that. We've seen that in washing machines. If they can't, they can do one of two things: reduce production or lay off workers. So these companies are in the middle of this really difficult strategy-making period. Yeah, we have Qualcomm, we have Apple, Intel. This is moving on to investment into the tech sector. Chips, for example, if they're subject to tariffs, we're going to hear more companies in the United States seeking alternative ways to avoid this, because their supply chain is so intertwined and globalized that any kind of serious setback to it will cost them a lot of money.
And we'll be watching. Saruhan Hatipoglu, thank you so much for joining us.
Pleasure.
Thank you.